Three, two, one. All right. And we are live from Crypto Land. This is Tyler West with my good friend Mike Scaffidi. He's been a good friend of mine for many years, since the high school era. And he's been one of my staunchest fellow crypto enthusiasts for about 4 years now.
Yep.
He actually turned me on to Stellar. As you can see, I dressed for the occasion, Mike. Did that for you, bud. So we're just gonna we're doing this chat today because we want to share our enthusiasm with anybody who's listening about crypto. And Mike's also one of the more astute and economically minded people that I know. He's very fun to chat with about crypto stuff, and I'm hoping that you guys get a lot out of it as well. So today we just kind of offhandedly decided we're going to talk about what we think are the most exciting developments in crypto at the moment. And why don't you start us off, Mike?
Yeah, so it's March 27th, and really the thing that I've been looking forward to for quite some time now, I'd say ever since November of last year, is this Coinbase Card. So even anybody that's not been paying attention to the crypto space and is into the Wall Street space knows that Coinbase is filing for an IPO relatively soon. That's kind of a big deal. So Coinbase is currently the largest exchange. I believe that it's the largest exchange in the United States, but worldwide, I don't know if it's larger than Binance, but it's up there to the point where 11%, this is what's projected or estimated, 11% of all cryptocurrencies are held or transferred within Coinbase worldwide. And that's projected to rise. And so that's kind of a big deal because it's this sort of central location for all these cryptocurrencies to kind of move. And so why I'm excited about this Coinbase card, I'll get to that in a second. But so really you'd have to understand, so people that are not familiar with the crypto space, I mean, my knowledge in cryptocurrencies goes beyond just Bitcoin and holding cryptocurrencies. I started learning, it's forced me to learn about the history of money and how it's evolved to the way it has today. And so I don't want to get into the history because it goes back thousands of years. But basically in 2009, this person or organization, most likely an organization, that's my theory, Satoshi Nakamoto created created Bitcoin, the first cryptocurrency, and he did that in the midst of the financial crisis. And so since then, that was in 2009, worldwide, Bitcoin has been used as kind of like a hedge against inflation. So we've seen fiat currencies worldwide, the dollar, euro, yuan, yen, I mean, name it. All of them have been inflated, and they're constantly inflated, and they're not really backed by anything. And so here we have Bitcoin, which sort of operates like gold in a way, but it's different because I could send it to somebody in, I don't know, Africa, and in a matter of, Bitcoin in a matter of hours, versus, my gold, I'd have to ship it to them.
And you don't need a special forces security detail to get it there.
Yeah, and it's decentralized. And so you don't need a middleman to get there, well, other than an exchange platform. So tying into the Coinbase card, since Bitcoin started, I've discovered that the use for cryptocurrencies have been pretty uh, used by people like for inflation. And then we started to sort of see new cryptocurrencies emerge or altcoins that had different purposes. So uh, transferring assets. So Bitcoin is actually very, very expensive, and it's not really scalable. So it's not cost effective for me to send you Bitcoin, for example, unless I'm sending a large sum of it. Uh,
Right.
so we've seen innovation in cryptocurrencies which could transfer assets very, very quickly, a lot of value, and with fractions of a penny. And we'll talk about those cryptocurrencies. And then other altcoins provided tokenizing assets, so you can actually look at um, like supply chains, for example, and you can tokenize each item in a supply chain as it moves, and that's very useful for our economy. And so we've seen a lot of cryptocurrencies do that. Well, so Bitcoin is king. It was the first. It's used pretty much on every continent. I would even think that there's someone in Antarctica that's using Bitcoin. That's just me speculating, of course. That's how popular it is.
And why not?
It would not surprise me to learn that. And then tokenizing assets, the king of that one was really Ethereum. Ethereum was the one that really caught that wave. I'm calling these waves, by the way, because if you look at the way these cryptocurrencies function, Bitcoin, for example, it's not the best cryptocurrency. Ethereum, for tokenizing assets, it's not the best for tokenizing assets. There are actually other ones that are more efficient. So why are these two cryptocurrencies number one and number two? Well, it's because they caught the wave. It's like, how do I put this into perspective? When the internet first came out, it's like the Hotmail caught the wave for emails.
Right.
And they had a lot. They brought in a lot of users, and as time went by, there were more innovative and efficient ways to do email, like Gmail, for example. But that took some time. But before that, Hotmail had already caught that wave, and AOL, before they were outdated. But we're still in the very infancy of these in the technology. So that's why I think that well, with the exception of Bitcoin is basically going to be operating as gold. And like I said, it's being mined in many countries. It's going to be pretty close to impossible, I believe, even with artificial intelligence, to hack into it, just because it's so prevalent. And there's security in that. And so there's trust that if I put my money into Bitcoin, I know that it's safe in there. Well, we won't get into that. So there's a reason why the crypto market is called Bitcoin and then altcoins, and it will always be that way. Bitcoin and altcoins. It's like, even if the latest technology comes up, it will still be part of the altcoin category, and then there's always going to be Bitcoin.
Yeah. And anybody who's been dabbling in crypto has probably realized that in order to acquire some of these more obscure coins, you have to buy them with Bitcoin.
Right.
Now that was pretty much the only thing you could buy other cryptos with up until maybe 2 years ago. Now you see this explosion of new trading pairs, whereby the effect of Bitcoin as almost like a reserve currency for the crypto space has been somewhat diminished, but it's still the king, and that's why I say that it's a pace setter for the rest of the crypto economy.
Yeah, and I mean, one good way to look at it is, in the history of money, it was metals. Metals is what people trusted. Oh, I trust that that's gold. It's shiny. It's pretty, and I know that it has value because I think it has value. when they started expanding from it, like fiat currencies, it was a note that said how much gold you owed, but the gold was always there. It was always in the back of everybody's head that I own that. Well, obviously we've
Yeah.
sort of gone away from that, but that doesn't mean gold has gone away as a form of currency. So I bring this up because no matter how the technology evolves and how it expands, those cryptocurrencies will always be a legacy of Bitcoin, which was the first blockchain, because that's what it is. It's essentially
Hmm.
blockchain technology. And so however it evolves, however much value it brings into its own space, it's basically part of Bitcoin's umbrella. It's just how I see it. That's why I think Bitcoin is going to be around for a very long time. It's not going to go away. Um, so I talked about inflation, I talked about tokenizing assets, and then transferring assets. The cryptocurrency that caught the transferring acts of assets wave was XRP Ripple. So that was created back, I think it was back in 2012. A very, very bright programmer named Jed McCaleb worked with another team, and they basically came up with this blockchain, a pre-mined cryptocurrency. So that means they mined it all, and then they issued the rest to the crypto space or kept some of it. That's the difference between Bitcoin and some of these altcoins, is that if they're mined, it's currently in production with processing computing power from people around the world, whereas some of these altcoins have been pre-mined in a room very quickly
Hmm.
and have served a different purpose. So
Which makes
XR,
them appear a lot closer to fiat to
yeah,
a lot of
yeah.
people, and in many respects they are.
And a lot of people don't trust it because essentially what you're doing is you have this group of people that have pre-mined this cryptocurrency and are giving it out. And whereas Bitcoin, Satoshi Nakamoto, whoever they are, mined it the way anybody else would be mining it today. So it's not like they
Hmm.
mined it before, kept it to them, and then sold it, once they had their own product. No, it's like Bitcoin was, anybody can start mining once it was started to operate. That's why Bitcoin has a lot of faith versus some of these altcoins. However, Bitcoin is not scalable, so we do need these altcoins to be able to serve a more efficient function in our world. And so
And let me
Ripple
let let
came out.
let me explain something to people. Um, so when you say scalable, what we're talking about
Yes,
is transaction volumes. Bitcoin was not
transaction
designed to be
volumes and
able
speed.
to handle, yeah, a high volume of transactions,
Yeah.
which is why
So
if you
yes,
try to send some Bitcoin, 30 minutes to get to its destination. Um,
sometimes even
some of the
hours.
other coins, I'll use one of my favorites as an example. Uh, if I send ADA, no matter, or also known as Cardano, no matter how many I'm sending, it usually arrives in under a minute, and
Hmm.
the transaction fee on that is, for all intents and purposes, ADA, rather than
Hmm.
um, rather than a bid system where you're offering to pay a miner to run the
Right,
calculations for your transaction, and
right.
that
And
can
sometimes
eat
those
into
fees.
your those fees can really eat into your
Yeah,
gross. I think it cost like somewhere to the tune of like $40 to send a few $1,000s worth of Bitcoin, for
yeah,
example.
yeah,
Whereas one ADA costs $1.17 today.
yeah. Exactly. And so ADA is a good example. That's another pre-mined cryptocurrency, Cardano, for people that don't know.
Hmm.
ADA is the name of the token. I'm sorry, the cryptocurrency, I guess. No, it's the token. Um, So for transferring assets, XRP caught that wave. They like you were talking about, it's scalable, so that's the number of transactions over a course of time, and XRP dominated this as number one for the longest time at 1,500 transactions per second, compared to Bitcoin's 3 to 4. So that puts that into perspective, and it costs fractions of a penny to do it, whereas Bitcoin, it costs, like you were saying, up to could be $40 or more. Um, so we have these waves, like I just described. But since I'll talk about this last one, transferring assets, because that's where we'll get into this Coinbase card. So interestingly enough, at the end of last year, or I think it might have been the beginning of this year, XRP, or Ripple, the Ripple company, the SEC went after them. And it was the way their company was. I don't want to go on a tangent, but we can do this on another video. But basically, the SEC said that their XRP was securities. Since they're a for-profit company, XRP has to be listed as securities, and they have to pay taxes on it. And so they're fighting that in court. There's some litigation. But XRP's sister company, or I guess little brother, however you want to look at it, Jed McCaleb, the creator of the Ripple blockchain, left and created Stellar, who's on your t-shirt. And he was very, very wise, because as opposed to, I don't want to get into the background too with Stellar, but he didn't like the way Ripple was run. Long story short, it was a for-profit. He decided to make a non-profit. He wanted to make this coin available to everybody. So it's kind of got like, you want to put your money into someplace, into a pre-mined coin. I don't know if I'd feel okay with putting it in a for-profit company either. Now, you got Jed McCaleb, who's actually on a mission. This guy is already worth tens of millions.
And let me add that
millions.
Ripple, or XRP, is perfectly designed for its use case, which is to be used as an interbank exchange medium.
Yeah, so they really targeted the banks.
Yeah, so I think I'm imagining Jed McCaleb's thought process here. He probably realized at some point that XRP is great for its intended use case, but if he really wants to change the world and bring, a people's coin to the third world, even, you can get into that in a little bit, that they would have to do things a little bit differently in order to win the trust of general consumers and the marketplace.
Yes.
So, I could just see that being the thought process.
Yeah, and I mean, the Ripple company really took the, in my opinion, the motivation out of cryptocurrency. So the whole premise of cryptocurrencies is that they're decentralized. Whereas the Ripple company decided, hey, we're going to take this technology and we're actually going to make it centralized. We're going to actually control most of the supply. We're going to give it out to the highest bidder. I mean, it's not bad that does bring value to the token, and but it doesn't really get to the person, at the grassroots level. It doesn't make it there. It's sort of very exclusive, and Jed McCaleb saw right through that and it's like, no, I want to make this technology available to everybody. They're like, okay, well then go make your own. You're free to do it. He's like, okay, fine, I will.
And I gotta say that based on knowledge of the origins of both Ripple and Stellar, that I believe the SEC going after Ripple recently was equal parts necessary, because Ripple is trying to, not just trying, but is in bed with the banks, but also performative, in that they want to send a message that the SEC is in charge.
It's a good point. Yeah. I mean, I also have theories about the timing of the whole lawsuit. Ripple's been around for a very long time. Why
Right.
now?
Why
Why
now?
now? And so, um, Ripple for the longest time was the number three traded cryptocurrency, and now I mean, they're still in the top 10, but this lawsuit has definitely hurt them. And there have been other cryptocurrencies that have started to be bumped up. And if you try to look for news on Ripple, you're just going to get more details of this lawsuit, whereas you see other innovation happening. So it's definitely
Hmm.
stifled. Um, I don't. They might be progressing on their blockchain, but it's not making their headlines. People are concerned about this lawsuit, and so in the meantime, other cryptocurrencies have been sort of advancing, and one of which is Stellar. Uh, so this transferring assets wave, Ripple caught it, but there's competition within it now because of the whole SEC lawsuit, and here comes Stellar, and so all this we've been talking about have been tying into this Coinbase card. So once again, we've had waves that people have sort of dumped their money into, and that's inflation, protection against inflation, tokenizing assets, and transferring assets. But the next big waves, I think, are coming in the cryptocurrency space, and it's not really understood yet, but I think it will be in the coming years, and I think that's in the banking sector and well, just banking sector. And so, what I mean by that is there have been talks worldwide about each country creating a central bank digital currency or CBDCs. And so that is in development for a lot of countries. The US there has most to lose. The US is very slow, and it makes sense because the US has the most to lose here. The US dollar is the most traded
Right.
currency in the world. It's the world reserve currency. I won't get into the
And
history of
dollar
that.
dominance is what it stands to lose.
Exactly, exactly. So the central banks are not motivated to do it. At the same time, if you understand the economy, the amount of debt and the amount of just money printing that they're doing, if they stop that process, it literally crashes everything. And I mean, if you thought 2008 was bad, this would be far more catastrophic, in my opinion,
Hmm.
than the 1930s, the Great Depression. So obviously, nobody wants that to happen, right? At the same time, you've got this other problem like, okay, it's unintended consequences. We have to do this to avoid that. But at the same time, we've got all this debt, we've got all this inflation that's coming up. Our economy is basically in not really doing well since COVID came out. And so they know it's kind of inevitable. The central banks, the Federal Reserve has to, they can't ignore it. They're like, okay, well, let's see how we can work with this. And so you've got banks all around the world that are doing this, and that's the next wave that will be developing. But this Coinbase card is the beginning of banking with cryptocurrency. So for people that don't know, the Coinbase card is a debit card. It's not a credit card. It's a debit card. It's a Visa debit card. So it's accepted everywhere Visa is accepted, which last I checked is pretty much everywhere. Um, and the way it works is it allows you to spend cryptocurrency into the real economy. Now, there's some things people need to understand. So there's this stable coin. A stable coin is a coin that is of cryptocurrency, which is basically supposed to be on par with
Peg, yeah, it's
the dollar.
pegged to a national fiat.
Right. So you see Bitcoin and Ethereum doing this and all other altcoins doing this. The volatility, stable coins, they call them stable because they're stable. They stay $1. No matter what cryptocurrency does, no matter what gold and silver does, it stays $1.
One USDC is
Right.
always $1. One USDT is always $1.
Right, right. In the euro, there's stable coins for euro. There's stable coins for, I'm sure the Chinese have it, and so do the Japanese. Um, I bring this up because, and the U.S. there's several different stable coins. There's the USDC, Tether, True USD. There's a bunch of others, but the two largest ones are Tether. That's actually the number 3 or 4 traded cryptocurrency, and then USDC. Well, Coinbase has said, okay, so if you had, let's just say you had some ADA in your account. You could use that ADA to go to the grocery store and buy stuff. And Coinbase would automatically convert your ADA into USDC. They'll take a fee from that, but then you'd be using your ADA in the real economy. Now, if you wanted to take, let's just say, $1,000 from your bank account and put it into USDC, you'd have 1,000 USDC. Coinbase will allow you to use that USDC with this debit card without any transaction fees. And the rewards that you get are 4% back in Stellar or 1% back in Bitcoin. Those are
So this is really exciting because up until very recently, when they started coming out with these crypto credit cards, biggest psychological barriers to new people taking an interest in crypto is the abstract nature of it, right? So you buy these cryptos and they're sitting in an account somewhere. What can you do with them, right? Now you can, now with a crypto credit card backed by your crypto holdings, you can go grocery shopping. You can get a haircut.
Well, it's a debit card.
You can
not a credit card.
Do all that. Thank you. Yeah, thank you.
Yeah, and you could do all that. You could essentially, and there's a reason why I think this is a really big deal, and it's not making headline news, and that is, so going back to what I was saying, let's just say I put $1,000 onto this debit card, and I go to the grocery store and I spend $100 on what I would normally buy, whatever that is. Let's just say my grocery bill comes to $100 bucks. And on my debit card, I'm opting to get 4% back in Stellar. So that's basically $4 in Stellar Lumens. Coinbase automatically converts that and then credits that into your account. Whether you get it right away, I don't know. It could be like after a month they give it to you. I don't know how they're going to do it. But the reason why this is such a big deal is now it is because it's spendable. You have the US dollar competing with cryptocurrencies in the real economy. And that's a big deal because on one hand, the US dollar, you have the Federal Reserve pumping money, you have stuff going on with politics, stimulus checks and whatever, stuff that's beyond anybody's control. On the other hand, you have cryptocurrencies, which are, you can't print it. I mean, in Stellar's case, they have 50 billion in supply, max supply. And then they have 20 billion, 22 billion or so in circulation, and more will be added to circulation as time goes by. But the max is 50 billion. That's all there will ever be. I don't think they could change that protocol. I'm not sure. Maybe they can, but they'd have to vote on it, and I don't know anybody that would. And then you have fiat currencies, the US dollar, which are just going to continue inflating. So I think, I'm speculating that when you see these two competing in the real economy, we're going to see cryptocurrency adoption rise dramatically, especially with this crypto card, because word of mouth is, just because of the nature of money and how much inflation is just going to be keep hitting it and hitting it and hitting it, it's not going to be happening with these cryptocurrencies. So in that example that I provided, I go to the grocery store and buy $4 worth of, $100 worth of groceries. I get $4 back in XLM. What's that XLM going to be in 10 years from now? I might be able to look back and be like, hey, those groceries that I bought for $100 are now, I'm able to buy like 2 months worth of groceries with just cryptocurrency that I earned. And people start to realize this, it'll create more mass adoption. It'll continue to add more value into the cryptocurrency. And I don't know what, at some point the politicians are they're gonna figure out what's going on, and they're gonna want a piece of this. I still don't know how that plays in. But I'm bringing this up because I think that this is the next big wave. This Coinbase card and other debit cards like it, where we're spending actual cryptocurrency into the real economy. I think this is the
So
next big wave, and we have this
I
cryptocurrency.
agree. I see the same things coming down the pike.
Mhm.
I think that the Coinbase card is a big deal for this reason, because Coinbase is a registered brokerage in the U.S. So U.S. persons feel very safe with them as a company.
That's true.
That will probably improve when they IPO.
Yeah, yeah. So
But these
I want to be.
crypto-backed debit cards and credit cards have been around for a couple of years now, but you have to park your cryptos with a company that's operating out of Malta or Hong Kong
Well, not to
or
mention the reason why you don't see mass
another
adoption.
jurisdiction. Hmm.
Yeah, like I think crypto.com card is a good example. That one had pretty mass adoption, but there's some fees associated with it. So really, it's all driven by speculation that crypto.com coin could continue going up, and that's what really makes it worth it. But for a lot of the people that see the transaction fees, they're just like, you know what? I'm just gonna use my regular credit card, get cashback rewards on that, use that cashback to buy
Yeah.
the crypto.com card. They're not seeing very much incentive to go towards it, but I think this debit card changes that because anybody that uses USDC, and I
Hmm.
know I will, because I like to know that my money is in someplace stable when I'm going out to the grocery store and spending it. I don't want to think of like, oh no, did it go down today, or should I shop someplace
Right.
else, or did it go up today? Should I buy a lot? So I'd rather have it not think about the crypto market while I'm shopping for groceries.
Yeah.
And so that's where I think Coinbase, and you touched up on it right there, is like there's trust because it's a U.S. company. And I do feel like my funds with them are safe. What I do have with them, and yeah, that's also why I don't necessarily trust crypto.com. I think they're
Hmm.
out of. You might know better than I do, but are they out of Europe or
I forget where they're out
Asia?
of, but
Yeah.
yeah,
So
it's
there's
Asia or Europe.
and it's not that I don't trust those countries. It's just that because they're not in my country, I can't complain to somebody. I
Right.
have to complain to the ambassador.
The nice thing about Coinbase is they are a US company, and if something were to happen to your funds, you at least have some recourse.
Yeah.
If if you park your funds with a company operating out of a foreign jurisdiction,
Mhm.
you don't have much recourse if something were to happen.
That's exactly
And
it. Yeah.
and that makes people feel safer, makes
Yeah.
US persons feel safer
Yeah.
with Coinbase.
Yeah,
That's
nobody wants the anxiety of knowing that their hard work and earnings could be wiped out,
right.
and then they have no. They, I mean, that could happen here, but at least we'd be able to do something about it. If it's we could go after Coinbase with litigation. It gets harder to do
Hmm.
when it's overseas. Um, and I really want to point it out that this whole IPO that's happening with Coinbase, I am not at all advocating anybody to buy into the IPO. IPOs, they tend to get very volatile. They tend to be in favor of the big institutions and the hedge funds.
Yeah.
They get first dibs. So I'm not at all advocating anybody to buy
If
into
you've got the money to buy shares in Coinbase,
it.
why wouldn't you just buy crypto?
That's what I see. That's how I see it. It's a valuable asset, not going to be inflated. Well, there are some inflationary cryptocurrencies, so I don't want to go off on a tangent, but for the most part, at least the top 10 or the top 20, most of them, save Dogecoin,
Right.
are deflationary in nature instead of inflationary. Dogecoin is a special coin backed by Elon Musk. He tweets something and the coin just rockets.
Yep. Backed by the full faith and credit of Dogecoiners.
Yeah. And I'm not bad talking Dogecoin. I think that it's funny. It actually it's more valuable in my opinion than fiat currency. So that says something.
I believe it was started as a joke, and it
Yeah.
is held in many cases as a joke, and that's fine. It's doing what it was supposed to do.
Mhm.
And if
Yeah.
that meme increases in value, then all the more power to its holders.
But with this debit card, I think that we've had such a centralized world for the last however many thousands of years, with kings, for example. Everything is centralized: a king, a kingdom, a
Hmm.
castle. And I think we're moving away from decentralization.
From
Centralization,
centralization.
yeah, centralization allowed, oh my gosh, the economy to expand, allowed the human population to grow substantially large. I mean, that's with technology too, the industrial revolution and everything. But centralized money
Hmm.
had its purpose, and now that it's getting to the point where if we rely on that system, then we better prepare ourselves for a really horrible times ahead with the Great Depression, or we could start to sort of migrate over to this decentralized system. And I think that's where we're going to go, because there's so many really neat innovations that are taking place in the crypto space that have very real use
The
cases.
upside. Hmm.
Yeah, the upside is tremendous, and the downside is, you got to be careful where you put your money. There are thousands of altcoins. A lot of them are scams. I would say to anybody that's not familiar with the space, think of it this way: if it's too good to be true, it probably is. Uh, and you gotta think about Bitcoin is in every location. There's so many people mining it all at once. When you have an altcoin that's just coming out and is only at a few locations, it actually becomes easier to hack. So to hack it, you need to have 51% of the um, so in order for, if I were to send you Bitcoin, that amount would need to be verified by all the computing happening all at once. I mean, it's happening so quickly, and they're doing it all at once. But if I can get 51% of all the computers to agree with me, I can essentially tap into all the funds. Not all, but I can tap into funds into the blockchain and take
You
that
can
money. That's how
manipulate the
you
consensus.
can manipulate the consensus. Thank you. And so when you have these cryptocurrencies that are so relatively new, here's a good example: Bitcoin Gold. The name sounds amazing. It's Bitcoin and it's gold.
Hmm.
Oh my gosh! And it's $5. Oh, I've got to get in on this. But what ended up happening is it got hacked, and I think the hackers took $200 million worth of funds, which is, it's devastated anybody that held them. Lesson learned: if the people just put $5 worth into Bitcoin back then, it'd probably be worth
Yeah.
500 right now. So, um, yeah, that's why I
I
think
don't look at anything that appears to be leveraging the Bitcoin name to their advantage. That just screams scam or manipulation to
yeah,
me. And I'm not going to name any coins, but there's plenty out there that have the name Bitcoin
yeah,
appended to something else.
yeah. Bitcoin Cash is legitimate. It
Yeah.
solved a lot of the problems with Bitcoin, or it tried to make it more scalable,
Hmm.
more available. And then, but they kept forking. And now there's Bitcoin SV, which is supposed to stand for Satoshi's vision. The people that did that uh, thought that Satoshi had a vision for mass adoption. They're like, okay, Bitcoin SV can actually do that. But now people were starting to say, okay, wait, you're forking it left and right. When will this end?
Hmm.
And one thing to note, that anybody, you and I can fork Bitcoin. I don't know how to do it, but anybody can fork
Yeah.
Bitcoin, but you cannot fork the computers, the nodes that are worldwide that are processing the
Yes.
transactions. You can't fork that. And that's what makes Bitcoin so valuable. That it can be forked a million times, and those forks will be worthless because the original Bitcoin, you've got to go to each computer worldwide and convince them to move over to your platform and abandon Bitcoin. And
And you got to
I don't
convince
think
them
that's
that
gonna
it
happen.
pays better.
Yeah,
And that's going to be really hard to do
it's going to be very hard.
when OG Bitcoin's sitting
Yeah.
in at $55,000 a
Yep.
Bitcoin.
Yep. Yep. Exactly.
Yeah.
So I'm really excited about the space. I'm really optimistic. Um, about the future because of the crypto space, and I'm really looking forward to this card when it comes out, just to see what happens. But
So is this the next wave that you were talking about?
I believe that this is it. I believe that this is the next wave. I think that Stellar. I think Stellar is going to get the attention of a lot of institutions. I think once this card comes out, there's going to be other cards. I want to put that out there. There's going to be other cards, but this one is going to get a lot of attention because it's coming out in conjunction with the Coinbase's IPO, and I can foresee. I mean, right now the way it works is that they're making money off of transactions, people buying and selling cryptocurrencies. I think this card is going to be a huge source of revenue for them that's not realized yet. And it won't be realized. It'll be realized after their IPO.
Yes.
And so that's why I'm calling this the next big wave for cryptocurrency. And I think and this is just speculation, but that's why I'm very, very bullish on Stellar. I think Stellar is going to be the center of that.
So, like a lot of people, you probably have used Coinbase as an on-ramp to the wider crypto ecosystem.
Yes.
And you may still. I do. Not always, but I do. Now, so in order to buy some of these more obscure cryptos, and I use the term obscure loosely. I mean, it took until now for Coinbase to list Cardano,
Yeah.
one of my favorites. But you're accustomed to having to take your crypto off of Coinbase to go buy it, to move it into another exchange so you can buy the cryptos that you want, right?
Yeah.
And usually what you do is you send it back to your wallet. Okay. Well, I've been thinking about this. When Coinbase comes out with their crypto card, now you're going to have a really compelling reason to leave your crypto holdings on Coinbase.
I think that makes sense. And like I said, they want to be their 11% of all cryptocurrencies worldwide are on Coinbase or held or transferred through Coinbase. They want to be the number one.
It's in the name.
Finance, yeah.
So, their strategy is in the name.
What you said, I don't think they really care about the values of cryptocurrency because they're making money even when the market is going down. They care about being the platform that everybody uses and trusts.
Yeah.
To store, and to sell and buy and sell. And so what you just said makes me think that is probably what they're talking about in their management team. That's their strategy, in other words, their business strategy.
Yeah, they're going to be, I think they're going for the whole market in the U.S., and they will be the 800-pound gorilla in crypto finance.
Or
and
blue whale.
Yep.
Yeah.
It would be nice to own a piece of that, but crypto is such an easy and efficient asset to acquire that, their IPO, their stocks would be competing with my dollars or would be competing with cryptos for my dollars.
I mean, I don't think it's a bad idea to buy crypto stock, and I think Warren Buffett would agree with me. And I say that because he did something last year which surprised everybody. If you talk to him, he absolutely hates gold. He's like, what's the point of it? It doesn't do anything. It doesn't produce dividends. It just sits there. And it's like, I'll never invest in gold. But then he bought a big mining company called Barrick Gold, and he bought a lot of it. And this was during the time when he wasn't really doing anything, making any moves in the market because he said it was too high. And so people know Warren Buffett close enough that you can't really trust what he says. You have to trust what he does. And what Warren Buffett loves businesses. He loves buying businesses. Mm-hmm. So he doesn't like gold, but he knows that you and I do. So he'll buy the business that produces it. So he already said he hates cryptocurrencies. He wants nothing to do with them. I wonder how he feels about Coinbase. I bet you he might be like, no, you and I love it. He might be listening to us right now. Doubt it. But maybe one day. And then he'll be like, yeah, maybe I'll buy some Coinbase because I know that these guys will be trading on it. Mm-hmm. So it's not necessarily a bad idea. I would never buy into an IPO. I'd probably wait a few months. Wait for it to hit its lows, and then I don't know, maybe buy some shares here and there. But I'm still more focused on the cryptocurrency than I am owning the business. This is a little different because, like we were talking about before, I can't send you right now. I can't send you some gold, even if I wanted to. I can't, but I could send you some cryptocurrency. I mean, that's very, very different, and functions a lot differently. So perhaps that same paradigm doesn't apply, but I prefer to store my money in cryptocurrency versus buying shares.
Yeah, and one of the features of cryptocurrency that's kind of exclusive to this exact period in time is that as we transition away from the old economic system into a new one where competing currencies and competing stores of value are allowed to coexist, is that the returns on your investment, as it were, of that are possible are geometric, not incremental.
Right.
So as we drive mass adoption of cryptocurrencies and tokens as a separate asset class, the value of those are going to multiply exponentially, logarithmically,
I think so.
not incrementally. And we've already seen that. We've already seen that to be true in multiple cryptos. Mm-hmm. Mm-hmm. And there's plenty out there that I wouldn't touch with a 10-foot pole, but as a group, they generally are rising dramatically in value.
Yeah, I mean, if you look at gold and silver, their function is, hedge against inflation. Let's think of some other jewelry. Other than that, not really much more. Actually, semiconductors. I know silver is very good in the solar industry, very useful. So there's some value there, but cryptocurrencies can be stored as a hedge against inflation. You can tokenize it. You can transfer it very quickly. You don't need to rely on the SWIFT payment system, which is very slow, very costly, and time consuming. And then now you've got the future of banking where things are more decentralized, and we'll see where the CBDCs go, central bank digital currency space, go in the future. But I think in the future, for instance, these stimulus checks are a good example that when they go into the IRS and it takes a while to finally get into our bank account, with the CBDCs, they'll be able to have a set amount and then they'll be able to deposit it immediately.
instantly, right?
They may even be able to set rules for their CBDCs, like you're only allowed to use this for groceries and such and such. You're allowed to use
Yeah,
it for rent. You're allowed to use it
and
for
they
that.
can't because it's technology based. It would that a government crypto would be able to be programmed to be used within certain parameters, and the
Hmm.
code itself enforces the use of the coin.
Yeah, I think they'll be able to achieve this, and I think that might be one of their motives for doing it. I don't want to get into the whole ethics behind it, but there are benefits and then there are costs of doing stuff like that. The benefits obviously being if you know that restaurants, for example, nationwide due to COVID, have been going. A lot of them have been going under, and basically closing their doors for good. One way that you could use CBDCs is you deposit this into people's accounts. Say, go. You can only spend this at restaurants. Well, that's a
Right.
little different because
Go.
COVID restrictions and everything. But that is one way they can revitalize industries that are failing in certain areas, and how they can sort of move in to help and keep the economy afloat. But then that's
That's a very good point, and I would go out on a limb and suggest that the government should probably do that
yeah,
because
right
it would
now
be
makes
a
sense.
great
Yeah.
it would be it would be a way to rebuild credibility with the public
Yeah, it would, but realize too
who
that
may be frustrated with the decline of the dollar, you know.
definitely, definitely. I think they really need to think this through, and I hope that they are, and I think they might be. They're probably talking about this night and day because they
Hmm.
really have to make it work. Because as with anything with government, there's always unintended consequences. They do
Yeah.
something, and then there's an unintended consequence that comes with that. So, in this case, the unintended consequence would be that if you're giving people these CBDCs and saying go out and spending it at the restaurant, it does sort of interfere with people's price discovery. It's like, would
Hmm.
they have gone to that restaurant, because the restaurant was actually really good? Um, and that's what would keep the restaurant afloat, not necessarily them getting this free handout and they're like, okay, well, I'm hungry, I might as well use it before it expires, so I'm just going to go eat.
Right.
So there's that unintended consequence, but nobody wants restaurants all over the country to close for good. So there is a use when with doing these CBDCs. They just need to do it in a way that doesn't create unintended consequences
Yeah,
and just
yeah.
mess with people's freedom and discovery. And so
So we're coming up at an hour.
okay,
Before we wrap up, I did want to touch on something else that's becoming more prevalent in the crypto ecosystem, and that's all these platforms and places where you can park your cryptos, and they'll give you a significant percentage of your holdings in interest
yeah,
to park it with them. Do you have some experience with that?
I do. So I'm currently using an app called Abra, um, and I don't want to talk about how I discovered it, but I did find
Okay.
them, and apparently, if you store certain cryptocurrencies with them, they will actually pay you to do it. So I was kind of skeptical, so I just put a little bit of money in there first. And to my surprise, USDC, for example, USDC, a
Okay.
stablecoin, they give you 10% annual yield. And you're like, wait a minute, my bank is giving me what point? I don't even know what it is, 0.01 or 0.51. They're giving me 10%. Like, okay, something doesn't seem right. But I tested it,
Mhm.
put some money in there, and every day around 4 or 5 o'clock, they deposit my money. They deposit money into that account, and I'm like, wait a minute, what? And so then I tested it. I took some money out, And then the disclaimer, it says it could take up to 7 days. It took less than a day. And then I was able to transfer that money out of there. And I was like,
So
what the
this is
hell?
interesting because they're offering 10% compounding interest.
Compounding interest.
They disperse it daily. So
Daily.
it's 10% compounding
Well,
interest
hold on a second. They
on your
don't disperse it daily.
on
They
your
don't.
stable coin.
Correct. On
Sorry,
my
go ahead.
stable coin. So they don't disperse it daily. They put it into uh, uh they accrue it daily, and that amount
Okay.
does get compounded. So it's accrued, but then it's paid to you every week, every Monday morning around 10 o'clock
Wow.
at 9 a.m. Pacific time. And then that money you can actually take it out and transfer it and put it into your bank account. And I'm like, holy cow, I'm basically making money by storing my money here. Like actual money. I don't even have to worry about what the cryptocurrency market is doing. If it's up majorly or if it crashed. Uh,
Yeah.
Now they could change it now that yield 10% is their daily yield. They could change it, but
Okay.
so far in the 1.5 months that I've been using it, it has not changed. So they offer 10% back on the stable coins for the dollar. I think it's True USD, Pax dollar, and USDC. And then they offer 4% back in Stellar. So I have my Lumens
Okay.
as well. And then 4.5% back with Bitcoin. And then I think they have 4% with Bitcoin Cash. They
Hmm.
have some with Ethereum and Litecoin, the big names. Um, and yeah, they pay it every day. I guess they're working in tandem with banks. And Aber doesn't actually store your money. Um, it's really complicated, but apparently the
Your
CEO is saying
cryptos.
that they lend out money. They lend out money, obviously more than 10%. They don't disclose how much to companies that want to invest in the fintech space that can't get a loan from Wells Fargo or Bank of America because Bank of America and Wells Fargo will not give you a loan.
Interesting.
So then they said they wanted to create a platform in which their employees and then the CEO himself would want to have and for themselves. And so they created that for everybody. So they claim to be making money and giving us 10%. Um, and my experience with it has been pretty good, but
That's a very compelling value
yeah.
proposition.
And he
Now,
says that the companies he issues these loans to, companies or people, entities, excuse me, um, they have to have a certain amount of collateral that if their endeavor or their project for this loan was to fail, they'd be able to back it up with something else and be able to pay for their loan that way.
oh,
And
okay.
so he said, so that makes the risk low for people that are putting their money into this account, of losing
Hmm.
it. And the disclaimer I did read, it said only in extreme market conditions could you possibly lose your investment. But they said in most cases it'll just mean that there'll be a delay when you get it back.
All right.
But
And if you wanted to pull all your cryptos out of Abra, is there a hold time?
yeah, there is. So you have to send them a notification that you want to pull your cryptocurrencies, and then they say, okay, we're looking into it. Every time I've done it, and it's been like a few times, it took a day, less than a day in most cases.
No big
And
deal.
then what happens is it's in your money's in your Abra interest account, and then it goes to your Abra trading account. And then for your
Okay.
trading account, you could then send it to Coinbase or send it to your wallet or wherever. But so far, it's been working out well for me. I mean, it's nothing better than getting paid to hold your your your
To
money.
sit on your assets?
Yeah, to sit on your assets. Exactly.
Paid to sit on your assets?
Yeah. Well, right now the banks are they're like banks. We'll take these assets. We'll take your assets. We'll own your assets.
and we'll give you a paltry 0.25%
No, it's not even point.
interest.
I think Bank of America is paying you point 0.15 or something. It's something ridiculous.
Yeah.
It's like I can't even believe they send me a statement like at the end of each year saying, here's what you have to report to the IRS. And
Make sure to report your 20 cents to
I know,
the IRS.
Like, okay, maybe the IRS will buy a taco with this. Sure.
Yeah, right.
So yeah, that's why I think there's more and more fintech companies that are pushing into this space that are making it very, very useful for people that really don't want to have anything to do with the volatility of the crypto space. They're just like, I just want to store my money into something, and I know it's not going to go up and down in value, and I'm getting paid 10% interest, compounding interest on that. It's a pretty sweet deal.
It does sound
no-brainer.
pretty
Now, I'm
neat.
still skeptical. I don't want to advocate this because Abra even sent me a questionnaire. It's like, would you recommend this to your friends? And I was honest. I said no.
I do wonder how long they can keep up with that.
Yeah, I'm still waiting to see what happens with this. Maybe after a year, I will start telling everybody. But in the meantime, we'll see how long you guys can keep this 10% interest. And if they can, wow.
Well, they're
that much more
somehow they've got to be making more than 10% interest in arbitraging the opportunities.
And there might be a lot of money going into the crypto space, a lot of people that want loans, or a lot of even companies that want loans, but they can't get it from Wells Fargo, and now they can get it from Abra, and then they'll be able to write off their interest to the IRS. That sort of
crypto loans are huge. That's another wave that we've got to discuss.
Yeah, the government wave. The government wave, when they start to tax everything, that will be interesting. I mean, it's good. Actually, it's okay. Regulation creates certainty if it's done properly. So I'm not anti-regulation, definitely not. I'm actually for
markets like certainty.
That's done responsibly, and it creates confidence. Regulation creates certainty. It creates confidence. I just hope that they do it responsibly and they do it right, because what they did in 2018 and all the governments trying to go after Bitcoin, and investors got spooked and scared, and it crashed the crypto economy. Okay, I mean, they didn't stop it from progressing. I think that's been apparent the last year or so. So now they know that they basically have no choice but to work with it, and I think that's where we're going. And it's not necessarily a bad thing as long as it's done, and with the intent of trying to help the crypto space expand instead of trying to kill it. And there have been politicians that have been on both sides of that spectrum.
Yeah.
But
let's hope.
Yeah.
Well, I really enjoyed this discussion, and I know that we're going to enjoy our next one as well. So just want to say thank you, everybody, for joining us, and
thank you.
We'll see you again very soon. Thank you, Mike, for this conversation.
Of course. And right back at you, Tyler. Always enjoy talking to you.
Yeah, likewise. All right. I'll talk to you soon, buddy.
Okay, sounds good. Have a good one.
All right. Bye-bye.